Okay, so today we're gonna look at yesterday's trading, 29th of May. And yeah, as you can see, I was looking for buy side, and primarily my bias for the day is actually bullish. So right now, just typing that want to see that blue line buy side taken before 9:30 is good because we're gonna have a opening range gap open in the premium, so it's pretty nice to short. So when you're going to see the setup that I miss and how did I manage myself missing the trade. So basically I'm just typing buy side before 9:30 is good, and it's 9:24 and we already tagged the buy side. So right now what we can see is displacement of this swing low. So that's a bearish market structure shift. And also we have a 5-minute CB. And right now, because I limit my stop loss maximum 20 points only, okay, so I do measure, and I was measuring and I can see that actually I can afford the entry. But to me, this taken out is not clean enough, but actually it is a very nice setup already. Okay, and you can see that it never fully closed in. And we have 30 more seconds to 9:30, and 9:30 just open and going down. We did open a premium, and you can see, yeah, so I missed this trade, and you can see how I manage it. And yeah, I I'm going to talk about this later, but you can see that, yeah, I was right very beautifully. Before 9:30 took out buy side, then later right now take out the pre-market sell side liquidity, which is the red line. And ultimately we can see it go down towards the new day opening gap, which is what I expected also because I am bullish. So I was expecting all this year to show me some form of reversal since I was bullish, and I wanted to enter long inside this area of confluence. So you can see me taking a loss in this area of confluence. Okay, so I was typing end dog, new day opening gap of yesterday, and also we can see that we quickly tag the new day opening, the opening range gap, upper quadrant, and then we have this first presenter fair gap also. It was a very nice shot, but I could not afford this setup also, so I forgo it. So right now is in my area of confluence already, just looking to see that if what I expect did happen. And you're gonna see me take another losing trade. No, not another, the one and only losing trade right now, because right now I really limit myself. So basically I was trading along with the 950 macro, and since we took out all the lows right here, and then we are at my area of confluence, and then we have relatively equal highs here also, so I was expecting it to reverse. So if it really wants to be, if it really was bullish, it will be a very nice trade. Okay, so 950 macro, just waiting for signs of reversal. So if it really was bullish, yeah, you can see that there was no impulsive entries here or what. It's all just logic. I'm just looking at how the new day opening gap. So on the C premium act as discount. Otherwise, I have no trade. So that's a BC right there, and just looking at if we get a media rebalance, and we did get so. So I'm just entering. So right now stop loss is just 15 points. 16 points stop loss. Okay, 16 points. 541 to 525. Yeah, 16 points. And you can see that actually, we did have 20 points or something, but I did not even care about it because all I'm seeing was just, okay, my entry was here, immediate rebalance. Also we have this emergent fair value gap, so actually my stop loss can be a bit higher, maybe here, but it does not matter. Okay, it's all within my risk. And yeah, basically we did see a market structure shift and then trade higher, but it did not give us what I wanted to see, which is the immediate rebalance reaction. Means after this, the 2 3 candles, we want to see expansion higher. So at first we did have it. Okay, we did it looked like it was bullish. We had expand higher, so which is good. So next time, since I enter with immediate rebalance with this confluence of the emergent fair gap also, I will consider rolling my stop. I will consider rolling my stop even below here. Okay, so maybe move it up 5 points, because we can see really see just in case if we were wrong. Okay, I managed risk even more impeccably. So right now here, this kind of movement is not what we want to see, and my stop loss, you can see it could have been more shorter, which is better. But anyways, yeah, it was a very nice trade. Okay, there was no impulsiveness or what. All was as I outlined, because we have taken up sell side previously, and we have a very nice buy side smooth highs here. So and it's Thursday also. So yeah, that was what I was expecting, because generally Thursday is an expansion day, and we have 8:30 and 10 o'clock news also. So I was trading based on the macro also, and definitely it's kind of pain to see that I missed this trade here. But through today, I have learned to really, I'm not really learn. I mean, like I realized that I can trust more on my analysts, because you see, actually I done a few trades like this in my demo also. So I actually hold quite some conviction towards all this kind of setup, like selling pre-market, holding to 9:30, because if we are in a premium and we know that pre-market, we know that 9:30 equities open is going to be open in a premium also. So it's a very easy setup, like you can see here, just like that, 100 points or so. And so basically I missed this trade, no big deal. Then I waited for something that makes sense, and which is also coupled with my bias of the day. So I could have take this scalp here, right all the way to here, and then this loss will be covered by the profit share also. So yeah, that's how I look at trading right now. And trading is just like that. You're going to lose trades, no problem. You're going to miss trades, no problem also. And the most important thing is you are not wrecking yourself. You are constantly managing risks. That's what I believe is most important. Like today, okay, it was a nice run, but I did not get to participate in it, because I doubted my analyst. I doubted it, and I could have afford the trade, but I did not. So it's a very great lesson, and I like how I did forego this entry right here, because I could not afford it also. So yeah, I really like how I forego these trades, and then later even this one. This one, why did I not take this? Because it's already in an area of confluence where I would like to see it reverse, because this is actually a market maker buy model in the making. If I was right, okay, this was the accumulation stage. And then what made me confident is this. Okay, these two bodies close above, close inside. Okay, inside, close to the low of the breaker of the 15-minute breaker, which was my last line. And then we had displacement right here, fair value gap. We had this short-term high taken. So that's a bullish market structure shift, right? And then we have this immediate rebalance with this inversion fair value gap. And this fair value gap was in the new day opening gap. But you see, these two bodies right here, we have this immediate rebalance, and by right, it should explode away from the new day opening gap. So I entered with in the deep discount, which is good, and I entered in the macro time, which is very good also, and it fit in my criteria that I only want like at most 20 point stop loss. So everything was pretty good until price does this. Actually, this was a reclaim fair value gap because you notice there's no body right here, and then it just had to just return right here. But if you ask me, I could my stop loss I can make it a bit more. I could have just shift it a bit more higher because actually I did not want to see it go past the new day opening gap already because price already did what it wants to do. So this is the midpoint. This is the midpoint of the opening range gap. This is the midpoint of the breaker, and this is all above the new day opening gap. And these two bodies is just above the new day opening gap. So, and do not forget that this was my signature. This was my signal, my green light that okay, what is happening might pan out. Okay, this right here, the high time frame confluence, and so my entry was multiple confluence. We had the open range gap, consequential encroachment. We have the mean threshold of the 15-minute breaker. We have a 15-minute BC discount that's not inside this chart, and we also have previous day new day opening gap, and we punch through and we traded higher, and we also have this inversion fair value gap, and we also have this yesterday's first presented fair value gap. So I was just wrong, but this was a very nice setup, honestly. And what I could have done better definitely is just managing my risk. So that's just it. It's just a losing trade. I just missed a trade. Yeah, big profits. Did not participate, but I took a small loss. And I stopped after that. You can see that I even logged out of my M Futures account because like last week I learned my lesson. Just 2 days I lost like $200. Just a week I lost like $180. And it's not a big loss, but to me it's kind of not the direction where I want it to go based on my account size. Because if I trade like that, my winners is kind of hard to outpace my losers. So by limiting my stop loss, I can be more picky with the trades. And even I'm being very honest here right now. Like even if I take a 30-point stop loss, or, or more than 20 points, at most um at most I can take is I think 25 points in it. Above that, it's kind of big for my account. I cannot afford it. It's kind of big for the stop loss. So that's not the kind of market environment and trade I want to take, because even if I take it, I'll feel very uncomfortable and I want to throw my stop loss faster. And if market goes my way, it's good. But if it does not and it is a loss, it kind of sucks to me. So it's not that I'm looking at the losses, but is that what kind of market condition do I want to be in? Do I want to participate in? I'm very clear with that. So it's this kind where stop loss can be logical and reasonable, not taking excessive risk, because right now I need can trade one contract and my maximum leverage for the day is $40 to $50. So because only by trading this way I can limit my losses, so I can manage my losses to let my winners outpace the losses. So that is my trade review for today. Yeah, I'm I'm not gonna miss any trades like that anymore. Okay, when I feel like it and I can afford it, it's a low risk entry also. Okay, and what I expected it took out buy side. So this reminded me of something that ICT once say also, like a stop rate only requires one tick. So a recap on that, yeah, make me look back because we took out buy side and then we took out this low, which is a market structure shift. So same premise right here, we took out multiple sell side. and then we have a market structure shift also. So yeah, these are the trades where it's most explosive, it's most dynamic, I would say. So yeah, so that's it for today, and a very good lesson, a very good study. I also want to include that I sat down in front of the charts at 7 o'clock, so until 9:30, until 9:50, I did not do anything. I was waiting for something to make sense, and because you see, like during 7:30, right, price was just in between these two range. Until 9:30 only we left the range. So that's what I was waiting for it to leave the range, and waiting for time, of course. So yeah, very nice trade. I missed it, but never mind. It's okay, Benjamin. Everything repeats, and I'm in drawdown right now. Maybe like $300 plus, close to 400. That's like a 10% drawdown. But to me, it's okay. I'm gonna recover it slowly but surely. I'm not gonna wreck myself. I'm not going to make my drawdown even bigger also. I'm gonna take my time, slowly, slowly, slowly. Because if I, let's say, $40 a day, to me to incur another 5% is five trades. To me, I incur another $400. It's gonna be a 10 trade. So within 10 trades, I believe I can get at least like a few winning trades at least. Okay, though I'm in a losing streak right now. Actually, I'm kind of curious also what's my stats like. So I'm just gonna show you guys. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, nine losing streaks. Okay, never mind. So if you can see, like, if it's $40 a trade, maximum also $360. But I think so. Looking at things right now, it's probably like a $40, $400 drawdown or something. It does not matter. Small matter. Really, it's a small matter. I'm not trying to bullshit, but all it takes is just one trade like that. Half of the drawdown is gone without risking more than 1% or so. So yeah, in fact, risking less than 1% is also possible. So this is the I'm very clear with what I'm looking at right now, what I'm looking for. So just letting time trade, because I've only touched life fund less than 6 months, if I'm not mistaken. Okay. Yeah, so just take your time, Benjamin. It's okay, losers. I've discovered a lot. Okay, I discovered really a lot losing, and I'm very glad. And I'm also very blessed that the way I read price right now, the way I look at price right now, is way more better than last time also. So just letting trade management, money management do the heavy lifting, and with enough time, I believe I will see results. So that's it for this trade review. I'll see you guys in the next one.